Like, there are entire articles that just give you no information.
I know.
It's wild.
They're designed to just steer you away from the truth. That's what it seems like anyways. I'm not a conspiracy theorist. But.
You ever get the feeling that everything in America is completely fucked up? You know that feeling that the whole country is like 1 inch away from saying, that's it, forget it. Let's see,
Hey, twist around. Now look, here's a house full of bees. You think the honey badger cares? It doesn't give a shit.
Listen, let's get one thing straight.
Price is right.
Guns don't kill people. I do.
Oh, y'all watch out now. There's a cougar down there.
Wow. Thanks for that, Bill. Real answer to a question.
Stand up in the crowd here.
I've got a case of scouts, and I'm not scouts with it. I'm camera, and I will never this off the
Got a pretty face. No hate, but I was a man. Listen, good girl, can't cook, and she probably do. Got me looking at the sky. Got me asking Jesus why he fell in love with a woman 55. No soul, so old, holding gold in both hands. Why she still with both mans, looking like she eats crayons. Somebody save Ian, cause I don't want to see him with the 40-year-old gold digging European. There's a cougar on the prowl, bringing young men down. She's older than your dad, and she's coming to your town. Somebody save Ian, cause I don't want to see him with the 40-year-old gold digging European. There's a cougar on the prowl, bringing young men down. She's older than your dad, and she's coming to your town. I think some apologies are in order.
I believe that is.
I don't even have a guess for you.
It's something that I came across on Instagram recently, and
was that the new Gwen Stefani single?
Yes, it was. Wow, you're good. You're good. I tell people you're
the years have been kind.
Idiot savant when it comes to music. I was in a rush putting this together. I don't know if the name of the song is Ian Gary or that's the name of the artist. You should see the video. I came across him though from I think he might be friends with Sean Strickland.
Oh,
I'm pretty sure that's how I found it. So
it's starting to make sense.
Yeah, kind of catchy little groove, huh? You're into that sort of thing.
Bad for a Saturday.
Yeah, could be worse. Dude, I was on the job site yesterday, and you could guess what kind of music was playing.
Mm-hmm.
And do you remember when there was that story about what's the guy's name? George Soros was buying up local Mexican radio stations.
Yes.
To try and influence Mexicans to become Democrats or, propagandize Mexican music listeners. So I'm on the job site yesterday, and Juan has the radio on, and I hear them talking about Trump, and I was like, I tried to like listen carefully. I couldn't quite get what they were saying because my Spanish isn't that good,
right?
And they talk so fucking fast on those radio stations. So I asked Juan. I said, "What are they saying right there?" Because they were talking about Trump, and he goes, "They're saying that that Mexicans are more racist than Trump." I fucking died laughing. It's like, oh my God. First of all, that is so goddamn true.
Yes.
Right? Mexicans, well, I'm going to go out on a limb here and say most people in the world are more racist than Donald Trump. Mm-hmm. And here's this Mexican radio station, these guys that no one listens to unless you are a native Spanish-speaking person. Yeah. If you were born in the United States, even if you are fluent in Spanish, you don't listen to Mexican radio. It's for immigrants.
Yeah.
Okay. And this group of people that is supposed to be being propagandized by George Soros and the left, their DJs on the station are saying, Trump's racist? Shit, Mexicans are more racist than Trump. That's what, it totally isn't working, and it's so fucking true. Mexicans are some of the most racist people against each other, Made my day.
Not bad.
So we got a special guest on the pod, unless there's any other, meandering bullshit that you wanted to cover before we...
I'm just going to complain about injuries.
This is a recurring guest, Mr. Bill Ferguson,
Formerly of the Santa Rosa Fire Department.
That's a story for another day. He is, I'll just introduce him while he's on the air just so he can correct me. But let's give him a ring.
I'm excited about this one.
Me too. The last time we had him on, it was awesome.
Still my favorite episode to this day.
Mine too.
Yeah.
It's probably number 2 to the 9/11.
Hey there.
Hey, Bill, how's it going?
Very well. How are you?
Good. So you are a recurring guest on the show, and we really appreciate you coming back on to talk insurance. Previously, when you were on, and just I guess just a brief kind of background, your credentials, you are an executive in the insurance industry. Is that fair enough to say? Probably don't need to say more than that.
We were just talking about the first time we had you on was both of our favorite episode we've ever done.
That's awesome.
Yeah. I remember getting done with that episode. Like, I could have spent 2 more hours talking about that stuff. So yeah, we're very, I've been looking forward to this all week after Kelly told me you were coming on.
I'm gonna have to give you Bill's number so you can just call him when these things pop into your head in the middle of the day.
And then you get a text from him. Why did you give that guy my number?
Of all people. Last time you were on, we were talking about excess deaths and the way that the insurance companies tabulate that death that number as a way to, make money. You know, you guys have to be honest about that kind of thing, because if you're not, then there's very real results.
Well, it's life expectancy. And then, the actuarial determination of, what a person's life expectancy is given all their individual criteria. So, I think the basis of what we were talking about last time was, what impact will, COVID and the vaccines and the side effects of that have, short term and long term, on, the cost of life insurance.
Has anything changed, Bill, since last time we talked? Because we've come across some, I shouldn't say we, Matt is the one that found some pretty interesting interviews or talks.
They were actually congressional hearings. A guy named Edward Dowd, who's actually an ex-BlackRock executive, and then a kind of a go-to statistician by the name of Josh Sterling. They were doing some congressional hearings, I believe, run by Ron Johnson, if I believe correctly, and they basically have the projections that you made the first time when you came on. So there's this kind of interesting thing, and a lot of these guys are, now that this data is bubbling to the surface, and we have the gift of a little bit of hindsight, is the narrative is probably the wrong word, but they say like, well, we can tweak the language, we can tweak the propaganda, we can say, well, let's just call it long COVID, for example, or whatever it is. And these guys point, and a lot of other people that are doing work on this, they say the one thing you cannot hide is our bodies, our deaths. Deaths at this date, mortality rates going up or down on this date. And these guys are using the exact same data that you were referring to the first time we had you on, which were actuary tables.
Right.
And so they were saying, like, look, here's the information. We're numbers guys. Like, I'm not even going to say, like, we're not even going to use the word, Pfizer or whatever. They said, like,
they're not speculating.
Here are the mortality rates going up on this date, which was May of 2021.
Right.
Yeah.
Right. And I think to kind of start, with a strong foundation, it applies quite across a broad spectrum, of, this industry and every industry is, past performance, will give you a good indication of what future projections can be, based on. So, with that said, that's the model that basically is being used. And,
that's always been the model, right?
Yeah. And the data doesn't lie, which is what, these people are coming out and putting into, the congressional hearing, is, hey, look, this is what we see statistically, from an experience standpoint. There are more deaths. There are more bodies, as you say.
Mm-hmm.
And, why? Well, that's the subset. We know that, hey, people are dying sooner, and therefore, there's more people dying. And, that's where the impact is going to come into play. So, specifically the life insurance industry, is, probably the hallmark of that, because they're basically predicting, like when people are going to, pass. So, all the people born in a certain year, they know, when that last person that was born in that year will potentially, pass away. So,
and if they get that wrong, then the company loses money.
Well, there is a deviation, for error built into it, so that's kind of, and they are very conservative because it's very difficult to adjust that, because of the type of products that they offer. The reason why they call it whole life is because the rate will stay the same your whole life. And then where they can adjust it is each year, you get different values that are put into the policy based on the policy premiums that you have paid in. And the three things that you get is interest, dividends, and cash. And so they can change the interest rate that you get on the buildup of the cash value that's in there. They can declare a lower dividend, okay, which is nothing more than a return of overpayment of premiums. And then, they can also do cash. So, like when people, they don't take the dividend, they take the cash. Most people take the dividend, but the accumulated dividends that are in there is referred to as the cash value in a whole life insurance policy. So that's, the long-term hallmark policy of the life insurance industry. Then you start getting into all the different types of policies that, we can break them down into two other categories. One is term insurance, where the coverage is just covered for a term or a period of time, 1, 3, 5, 7, 10, 20, or 30 years. 30 is usually the longest and the most expensive. And then the other one is known as the variable. They have a fixed and a variable universal life, and that it would best be known or described as a hybrid of the term and the whole. So you have flexibility without going into the full details. You just basically, the best word to understand the hybrid policy from is it is flexible. The main benefit of a whole life policy, which is what the sales pitch is all based on, is you will never outlive your insurance. It will pay when you pass.
Right.
Mm-hmm. So when you get over to the universal life, that's the main benefit. They have an internal term rate, but you get the benefit of the policy being what they call 100 plus. The policy will go as long as you put the proper amount of money in it, sometimes referred to as the funding, will carry you out to 100 years plus. So most people are going to pass before age 100.
Right.
So
has anything on that, we were talking about excess mortality. Has anything since the last time we talked changed that's significant or newsworthy in the industry around these excess deaths? One thing that Matt and I were discussing is, and I think he mentioned it already, but you cannot hide the bodies,
right?
But I think that the vaccine apologists, let's call them, who are blaming all of the deaths on long COVID, would love to find a way to hide the bodies. And since they can't, one thing that I speculated on was, are they trying to change the way that the insurance industries do their math? And I know
calculations,
and I know that you and I talked the other day, and we can get into this after you answer that question. Sorry to ask you a bunch in a row, but the way that they are making you guys kind of redo the past performance as an indication of future results. Is that right?
And if and I apologize, I need to pack even more into that real quick. Is because I think the spirit of where Kelly is going right there is because we had you on, how long ago was that? A year and a half?
Over a year, yeah.
Yeah, over a year. And what resonated with me the most in that conversation is for you when you said, look, I can't afford to institute, politics or my own personal beliefs. Like, I have to take the data and make a projection and make whatever adjustments based on that data. It's pure data. That's what I have to do. And you gave us your projections, and it was, something that as a hunch that we kind of believed was going to be happening anyway. Now here we are over a year later, and we have these congressional hearings. And this is why, one of the reasons why I was excited to have you back on is these guys are in these congressional hearings, and what they're saying, that's exactly what Bill said when he was on the show. He nailed it. Here they are, they have the data, and they're saying this. These same guys, which is Edward Dowd and Josh Sterling, are also saying in the congressional hearings, it's getting a little tricky because now we're getting pushback with how they tabulate the data of mortality. Now that is being kind of manipulated. Have you seen? Is that where you're going with that, Kelly?
Yep, exactly.
Yeah. Well, there's a couple aspects of all of that, and the very first one which is like we talked about last time, is the insurance company is the house, and
right.
They can't lose.
And the house always wins, which you said the first episode. I'm like, I just love how honest this guy is. It's great.
Yeah. So starting with the different products that there are in the marketplace, first and foremost, one of the things that, we do know, which is the reason why you see all the commercials and all the marketing towards life insurance, is that the term insurance, statistically, over the last 50 years, 95% of the people who bought term insurance in a given year never have it in place when they pass away.
Mm-hmm.
So,
and that's not just by chance, I'm guessing.
Yeah, well, that's just because it's a 5-year term policy or it's a 10-year term policy, and like a lot of things, these people, make choices and decisions.
Dude, we got to start an insurance company.
Yeah, it's like, do I pay my insurance or do I put gas on my car or food on my table?
Mm-hmm.
And a lot of times, that's what happens. So the policy isn't in place, or they let go of that policy and roll into a different policy.
Yeah. Or they just outlive it, right? And don't do anything.
They outlive it. Yeah. They say, I don't need it anymore. I don't have the need for that, Then you get into the other policies, which are known as cash value policies or participating policies, where you are participating, with the insurance company on the experience. And then that's where they can modify the interest rate and the dividend level, and even get down to a point where, hey, we're not going to declare a dividend on, this class of insurance policies this year. I've never seen that done. I've seen them decrease the dividend, and I've seen them increase the dividend, and it's really kind of parallels the stock market.
What about the fuckery that we imagine is probably trying to take place around excess deaths and the reporting of that? Do you see any evidence of that the insurance company is trying to carry some water for the pharmaceutical companies, or to try to explain away, or not, or are you guys completely just straight down the middle with this stuff?
Here's how it will all kind of play itself out is, they're going to see an uptick in the amount of, deaths. And so, where that's going to play out is they're going to take the data and they're just going to have a higher level of analysis. So all the comorbidities will then basically be, looked at so much more closely.
Yeah.
And, no matter, the whole underwriting aspect of it will shine a light on all that type of stuff. And I wouldn't be surprised I haven't seen it as of yet. And it may come out in the medical interviews that they have with people, is have you been vaccinated? If you've been vaccinated, have you gotten the booster?
And do you think that then the insurance companies are going to penalize people for that?
Well,
they have to, right?
Yeah, they have to. It's without question. That becomes, you're a greater risk than what, we originally anticipated insuring against.
I mean, how's the media going to spin that?
They're not, they're just not going to report on it. But, internally, the insurance companies are going to be able to make an adjustment for it. So, they just set the bar that much higher to qualify for a policy.
Is that something that you see coming? Are you projecting that, or is there actually been any kind of official language about that?
Yeah, there's no official language about it, but you sense it and you feel it. And, and even the disclosure as to why. So as a good example is a person applies for, let's just call it, $250,000 of insurance. Insurance company comes back and says, hey, you know what? We're not going to give them a preferred rate, and we're not going to offer them a standard rate, which are two different classes of health or risk basis. We're going to go and we're going to table rate them, starting A being the lowest and say G being the highest. Well, we're going to offer a D rate on this table rating, which is the standard rate plus. Mm-hmm. And then you inquire and you say, why are you doing this? And you're not going to be able to get that information.
They're not going to tell you it's because you're vaccinated.
They're not going to tell you the basis of it. They're just going to say, hey, that's, proprietary, private information
about you.
We based it. Yeah. And, we're going to, go ask the applicant / insured.
Huh.
Okay. And then we call them up and they say, oh yeah, I just got some general term that says that, hey, due to, my past medical history.
Mm-hmm. So interesting. So the way you would adjust the terms of that life insurance policy. So in the same way that someone, you find out that they smoke or drink or are really into skydiving, and in that category would also be like, how many boosters have you had?
Yeah.
And I could see Congress just, falling right in line saying, no, that's private information, and in order to protect people's privacy, we can't let people know that it's based on the specific things in their medical history, because that information could get out, and
which is hilarious, because those are the same people that we do need to know if you want to go to a restaurant, though, which is hilarious.
Hey, Bill, who do you think it has more power politically, the pharmaceutical industry or the insurance industry?
The pharmaceutical by far.
I would think so too. Yeah.
Yeah. The life insurance is quiet confidence, and they just are just, sticking to their knitting and doing their thing, where, the pharmaceutical is, not only national, it's international. And, they've got so many different, elements and aspects and risk. I mean, I think a great thing would be when you think about it, what did the pharmaceutical industry get? Moderna, Johnson & Johnson, and Pfizer, when they came out with the vaccine, they got 99-year liability immunity.
That's the best insurance you can get right there.
I mean, it's like unheard of.
Yeah.
I mean, just like, and the only reason they did that is because of their political clout and,
obviously.
Yeah, I guess the layman's kind of evidence for that, they turn on Fox, MSNBC, CBS, ABC, any mainstream media outlet, and that's probably the reason why that 70% of the commercials you see are pharmaceutical commercials and not life insurance commercials.
Yeah.
Oh, yeah.
And it's not like they're actually trying to get you to buy their product with those commercials.
Yeah.
Right?
Right.
It does make you wonder, like, well, why are you giving us these commercials? Well, we're being mandated to use your product. Without divulging the company that you work with, can you tell us, has Donald Trump approached you guys to try to offer a bond for $450 million for this fine that he has to pay in the state of New York?
Yeah, we haven't heard about that.
All right.
But
my question is, if you had a woman that came and wanted to buy a life insurance policy for only 1 year for her husband, do you give the husband like a little heads up to want the 6?
Well, if you remember, which was one of the elements of why, the insurance company never loses, that there's a 2-year contestability clause in all life insurance policies.
2 years, huh?
2 years.
Write that down.
Yeah. So
this is known as the Scott Peterson clause.
Hey, wait a second. Yeah. And the other one is if a crime was involved.
Right. So you can't get insurance for committing a crime, right?
Well, you see it here and there where, hey, the life insurance company's not going to pay because a crime was involved.
Yeah.
Yeah. And
I was just asking for a friend, but
yeah. I hear you. Yeah.
Hey, Bill, let's talk about the insurance companies leaving California. And also, I don't know if it's related, but I talked to you a while back about the insurance companies leaving Florida. These are homeowners insurances I'm talking about, and auto insurance. I think has actually been leaving California as well. If you correct me if I'm wrong, but and are the two states related? But I mean, we definitely are more interested since we're in California about what's going on here.
Yeah, I think they're similar, in some respects, but not all. And basically, what happens is we're starting to see, where the impact of, regulation and, the state government starts to come into play. Both states have different styles and ways in which they do it. Obviously Florida is going to be a lot more of a, open, capitalistic, non-regulatory type of, let's go to the private markets and see how we can solve that, where California would be on the polar opposite of that. The best way to understand that is, state of California has, the FAIR plan, and the FAIR plan, the FAIR stands for Fair Access Insurance Requirements.
And that's basically just the government handling, bailing out the insurance. Well, bailing out the insured, I guess. It's government insurance, essentially, right?
Yeah. You can't get insurance because of where you live. And so the insurance of last resort is the California FAIR plan.
You can't get insurance because of where you live because the California Insurance Commission has, and I'm right that it's the only state with an insurance commissioner has said that the insurance companies are not allowed to charge what they need to charge in order to be profitable in insuring homes. Is that right?
Yes, that is to some extent correct. The thing that is deeper than that is they're trying, which is part of the basis as to why a lot of insurance companies have a moratorium in place and why some have just withdrawn from the market and left and no longer are writing in the market, is because they're mandating that insurance companies write in those areas that they don't want to write in because they view them as catastrophe, exposed areas. So
the catastrophes have always been there, correct? I mean, this isn't a new thing. If the insurance companies could charge enough to make it worth being there, then the insurance companies would stay, right?
That is true to a certain extent, but that's kind of like where it starts to parallel the hurricane situation. When you're in a catastrophe zone, it's not a question as to if, it's a question as to when. And that's the problem with the hurricane. With the wildfires, it has that same characteristic. There's going to be a wildfire.
Mm-hmm.
So it's just, who's going to be in the path of it. And then,
yeah, I mean, I would argue that wildfires are more preventable than hurricanes, but
correct. Yes.
So
that right there is the problem.
Yeah.
Because federal funds, are extended to the state of California that are not used to mitigate that in the form of burn-offs and deforestation.
Right.
And so,
which is a new thing that started with the environmental movement, that this idea that we need to leave forests completely alone, let them just be totally wild, which has never actually been the way that forests have grown in the history of the world. They've always been maintained either by fire or animals or the people living in those areas. Yeah. So Native Americans or Native Europeans, for even, it's just, that's a normal way of dealing with forests that nature has. And by living in a zone that's it's devoid of animals and devoid of people burning it, and it's actually being intentionally let grow as wild and out of control as possible, you're actually creating a worse situation than ever actually existed naturally.
That's exactly right. And so, the threat increases, the possibility increases, and then the probability increases, and therefore, the cost increases.
And at the same time, as the cost increases, the insurance companies are being told they're not allowed to raise their rates beyond a certain point.
Yes, that's correct. I mean, that has had a modification to it with the last pass-through that was approved to go into effect March 15th of this year. So that is changing. Okay.
But it's too little too late right now, isn't it?
Yeah, exactly. It's like, this should have been on the radar 2 to 3 to 4 years ago. And, and the basis and the reason as to why it's come about, it's not the normal channel. It's like, two people wrestling and one says, okay, you got me. I'll give you this option to do that. And that's exactly it. I mean, the unhealthiness of the situation is already, in full bloom. And so, it makes it really difficult, for the consumer to start to understand this. It's like, okay, why did my insurance go up, 300%?
And what are the new rules that they're putting on the insurance companies as this is happening? They're making you guys use modeling instead of past performance to predict payments, right?
Well, and actually, as you answer that, maybe filter it through this question too. In your opinion, what's the level? Often when we see policies that look like this looks like it was designed to fail for some reason. And then in our mind, we go like, well, it's because that's the intention, is to make it fail. Do you believe that to be true with these policies in California?
I think that, they're not effective for the insurance companies that are participating in the marketplace. They might be perceived to be effective by the Department of Insurance, the regulators, and potentially effective for the lay consumer who says, okay, I got to pay my insurance, how much do I owe?
Right.
Okay. And hey, it's within the framework of my budget. Okay, I can do that. So from that standpoint,
well, yeah, I mean, but that's always as low as it can get, right? That's within my budget.
It can get, but now we have the insurance company saying I'm not going to participate.
Yeah,
I can't do that.
Well, I mean, obviously the people making these decisions, the insurance commissioner and his staff, of decades and decades of experience in the insurance industry. They really know how it all works, and they're very experienced at this, right?
And they have more data than they have ever had before.
Didn't you tell me that the guy's only like 40 years old and has like never worked in insurance?
Yeah, well, the insurance commissioner is, 49, and, he doesn't have the background and the experience with, dealing with the issues that he is. And that's part of the reason why he's a little, too little.
Why would we expect him to have experience?
It's in the same category as like, hey, come on here, you're the borders are. Pete,
right.
Yeah. But again, you're in charge of transportation.
Right.
Yeah. No. And
should not be shocking to any of us.
So you said the reform put in place. none of that has changed. That's just all being proposed right now.
Mm-hmm.
So basically, when you look at the timeline of what has transpired in the state of California, let's just say that, we'll go back 5 years to 2019 when the wildfires essentially started. So there's been, several dozen wildfires from 2019 to 2024.
Yeah, the 2017 we lost. That's when we lost 7,000 homes here.
Yes. Okay. So even 7 years. So the impact is even greater over that time. And so basically, the insurance companies went to the Department of Insurance and said, "Hey, our market conduct is to settle these claims. We have done that. We're in the process of doing that, but we're going to start filing for a rate increase because." This is definitely, much more than what was originally, anticipated from, or projected from, an experience standpoint. And the Department of Insurance basically didn't allow it. They stonewalled.
I have a question. This, correct me if I'm wrong, but the problem here, the hurdle that the insurance companies are trying to get over is entirely politically made. It sounds like it's political policy that's in the way.
It's just when you say political, it must be just the way that a democratic controlled government basically handles things, and the regulation is high. And so now with the regulation, being high, they're basically trying to dictate how the insurance company, arrives at what they call rate adequacy.
Mm-hmm.
And then, basically with, market conduct, and then, a good way to understand it is, it appears as though, and the Department of Insurance commissioner has put it out in communiques to the public, is that he wants the insurance industry to be like the public utilities.
Mm-hmm.
It's available to everyone. We're going to have oversight. We're going to regulate it, and basically, they will do what we say.
I don't see. Yeah, I mean that seems like a pretty good model. I mean, just look at how much everyone loves PG&E.
Yeah.
Who, by the way, are responsible for the fucking fires that happened here. So basically, they're saying, okay, the way that you guys are estimating the risk of these policies, that's not going to work for us anymore. We want you to use modeling instead of the past, instead of the way that you've done it forever, which has worked for the insurance companies. We want you to use sophisticated computer modeling. And it's not ironic to me, or that that's exactly the same approach that they take to climate change, or which, when we look at it, it's the modeling that they give us. It says that these things are supposed to happen, and if they don't happen, and then you look at the past and they say, no, you can't do that. This is a totally new environment. You have to look at these models that we have.
I went somewhere different in my head. It also reminded me of the new California gun legislation, where they go to firearms dealers like, you have to have, here's the new CCTV model that you have to do, and you have to store this much data. And they go like, that's impossible. And you go like, yeah, we know. It's supposed to be. It's designed to fail.
Yeah, it's that question. Are they just retards, or are they evil?
No,
are they evil retards?
We start getting into
dibs for a band name, by the way.
You get into capitalism versus communism, free enterprise, versus government controlled enterprise.
Yeah.
There's certain things that distinguish the difference between capitalism and communism. And the very first industry that is not nationalized in our capitalist society is insurance.
Interesting.
And so this, you see with the way that the California is going, they're kind of stepping over that line, and basically, we're going to regulate the insurance industry, and it's just not feasible.
No,
so,
well, they obviously want to have the PG&E version of insurance. They obviously want to have this quasi-governmental agency doing the insurance. It's probably for them having to provide the I forget what the acronym was for it, but the public insurance to people is just that nose under the camel's nose under the tent that they wanted. It's like, okay, we're in the door, we can do the insurance thing ourselves, and not allow the free market to provide the best product. We'll just charge whatever we want to, because we can also also mandate that people have to have insurance.
It's the same thing of selling, we're going to start taxing unrealized gains for billionaires. Right. I'm like, that's the camel's nose under the tent. Like, careful. Yeah. Like, I know you want to cheer that on because there's only, double-digit billionaires, and the rich should pay their fair share or whatever. I'm like, but that also creates the template that everyone eventually gets taxed.
Yeah. That's why we have a slogan around here at Liberty Tree. It says, so somewhere along the lines of just say no.
Yeah, it's all done through regulation, and so the biggest regulatory reform to hit California in the insurance industry was back in 1988, which was Prop 103, and that's where they had an elected insurance commissioner, and that's basically when they had the review of rate filings. And no insurance company could raise their rates without approval. And if you remember, Harvey Rosenfeld was the author of that. Now, what in the face of everything that's transpired, which is we're kind of in the crux of the crisis. The commissioner of California has come out and says, okay, we're going to enact some new reform, and it's going to be called the Sustainable Insurance Strategy.
That's what we need.
Yeah. Bill, if we take a quick break, I wanted to ask you, because would you call it the sustainable insurance industry?
The Sustainable Insurance Strategy.
Yeah, that brought up a question in my mind, because here we are now here in 2024, and you're telling us that we have these policies that very much, I'll just say this is my opinion, that looks like was created with the intention for the industry to fail, and therefore, have some kind of state controlled, state mandated insurance. What is going back to the, that flowery language that you just used, what is the kind of political kind of propaganda? Like, how are they wrapping this up in a gift that makes it look attractive to California voters? If you can answer that.
Yeah, basically he puts in his memo, it says, the new strategy that's proposed addresses a major limitation of Prop 103, which was passed in 1988, where the insurance companies were free to propose rates at any level needed to cover future losses, but unlike public utilities, are not required to cover all residents. With the combination of climate-intensified disasters, rising costs of repair and rebuilding, and global economic forces, so now we're looking at global economic forces, major companies have increased rates while pulling back from higher-risk properties.
I find sorry, go ahead.
Where the FAIR Plan is now the only option. So then they go on to say, Commissioner Lara's proposed regulation will have major benefits for Californians in the form of, and he lists 4 things: more reliable rates, greater availability of insurance, stronger oversight. So basically he's telling the consumer that, that, hey, insurance industry needs to have stronger oversight. Okay. And part of the oversight is we'll have strong public oversight of modeling, which is already being widely used by insurance companies outside of rate making and across the nation.
There's such a glaringly obvious parallel, because I'm going through some of these articles, everything from State Farm to Farmers Insurance to AAA. They're talking about how they're just dropping like 72,000 people, 100,000 people. And you hear, take two things. I read these articles and it quotes the in the zeitgeist, or the chuckleheads on like MSNBC are talking about like, well, it's climate change. I was like, but you look at what the insurance companies are saying, like, no, we can't afford to do this in California anymore. Like, it's just like, we're not going to set up shop to lose money. Like that's a bad business model.
Simpletons hear that argument and they hear like, the problem is that the insurance companies are greedy.
Yes.
They're just charging too much. What we're going to do is put in our own government insurance, and we're just not going to charge as much. And people are like, oh, brilliant. Why didn't I think of that?
Yeah, and I went through probably 12, 15 articles. I was like, not one single insurance executive, the word climate change comes out of his mouth, right?
Right.
Second thing, this also reminds me of me raising some comment sometime last year. It was like, man, $6 for gas, that's a little steep. It was like, well, the oil companies are gouging you. Like, only in California? Because in Nevada, it's $2.19.
And they just thought of this brilliant plan? Like,
yeah. It's like, why don't we make billions of dollars? Only in one state, though. We're not going to do this across the entire nation.
It's nothing more than governmental gaslighting.
Totally. Yeah. Let me ask you this, Bill. I was having a conversation earlier today with somebody about the increased severity of storms due to climate change, which is something that I'm skeptical of for a number of reasons. The insurance companies...
Data being one of those things.
Insurance companies are pulling out of Florida as well, and this person cited that as a example of climate change, because the insurance companies are in the business of making money, and they used to be able to make money in Florida. I don't know if this is true or not, but that's the argument. And now, thanks to climate change, they can no longer make money in Florida. What do you say to that?
Unproven, unsubstantiated. It would be, it just, then you look at it and you go, okay, define climate change.
Are they pulling out of Florida because of the hurricane risks?
Well, not like they were, 10, 15 years ago. I mean, they seem to have solved it because, when you buy a hurricane insurance, it's all backed by private bonds, that, the state of Florida basically puts together. And then, the hurricane piece then is integrated into, the standard policies. And that's also referred to as a wrap policy.
Has that changed over the 50 years ago? Were there insurance companies struggling with the situation in Florida?
Yeah, I mean, the hurricane always used to be integrated to the policy as a whole, and the private insurance company basically, was on, the risk for, the peril of hurricane. And so, that has changed. That doesn't mean that, today, hurricane insurance is still expensive because, of the experience level. So we're just looking at raw costs. We're not looking at, anybody making any kind of profit.
So nothing's changed in the environment. It's just the structure of insurance that has changed. And now it's because it'd be like getting earthquake insurance in California. It's hurricane insurance is a specific coverage. It's not included in the whole thing. Right. Interesting.
Yeah. And here's the interesting thing is that, I mean, just to kind of look at, the different perspectives. The California Earthquake Authority, which was basically formulated, back in let's just call it 1985, 1986. Okay. Since they've been in place, they've never had a loss. So in, 35 years, they've never had a loss. They've just collected premiums. And like we talked about last time, you see the expansion of the products, and they're getting braver and they're reducing rates. And one of the things that they're trying to do with the wildfires, which is really interesting, is with this modeling that they're trying to put on the insurance companies with this sustainable insurance strategy is, the regulation, they say, will correct a major shortfall of using historical data, which fails to account for wildfire mitigation. Well, you know, that's just beyond absurd, because part of the reason why we're seeing an increase in the wildfires in California isn't doing any wildfire mitigation.
Mm-hmm. Yeah,
right? But
I mean, that's elementary.
Logic. So they're saying that, you know, hey, the data that's being used isn't accounting for what it is that, you know, should be done that we're not doing. You know, and then they go on to say that the regulation specifies that any model must incorporate the best available scientific information on risk mitigation at the property, community, and landscape scales, including risk mitigation initiated by local and regional utility companies. This forward-looking change will also enhance a recent regulation that spearheaded and now enforces requiring wildfire safety discounts for homeowners and businesses, aligning with record investments in wildfire mitigation by Governor Newsom and the California legislature. Well, now they're saying that the state of California is making record investments in wildfire mitigation. I never heard anything about that.
Well, I think it was you, Matt, that you brought something up last week about the record something, and they calculated the record based on the last 4 years.
Right.
That was, if you only go back 4 years, this is record investment.
The Oscars.
Yeah. Oh, right. It was about the Oscars.
What was the other one? Oh, the State of the Union. Like record high numbers in the last 4 years.
Here's one of the elements of the regulation that's being proposed that I'm sure is really causing a lot of insurance companies, especially ones that are stock or that are private, are saying, hey, we just can't participate in this, is the regulation complies with California's strong consumer protection laws, which requires that any time an insurance company seeks to change its rates, it must provide a complete rate application with all information that the insurance commissioner requires for review. The proposed regulation creates a new process for a review of models by a panel of experts overseen by the Department of Insurance before insurance companies can use the new rates in a rate filing and meet the stringent transparency requirements under Prop 103. So you're going to have a group of so-called experts that are going to review whether insurance companies can, you know, substantiate that to raise their rates. And then those experts are going to be overseen by the Department of Insurance.
Wow.
I mean, then the insurance companies are going to then be like almost like literally going to court to try and determine whether, you know, you are legitimately, you know, worthy of increasing your rates.
It seems to me like it's obvious that they just want the insurance companies to fuck off so that they can provide their own government-backed insurance.
They don't have the wherewithal. They don't have the wherewithal to.
That has never stopped them in the past, Bill. I'm sorry.
Well, here's a good number to understand that. In 2019, there was $112 billion of exposure under the California Fair Plan. In 5 years later now, there's $312 billion of exposure. So
what does that mean? I don't totally follow that.
Well, that means that's the amount of risk that's on the table that they are insuring that is in wildfire areas for people that can't get insurance. And so these people are going to the California Fair Plan, which is the insurance of last resort. No insurance company, of all the insurance companies that are out there, no one will insure me. So my only option is to go to the state, and that number of exposure for the state is, you know, 311 billion and growing, 312 billion and growing.
Wow.
So the state of California has a $68 billion deficit, like we talked about earlier. Okay. And the governor has a plan that he's making a plan to offset the 68. So we're $68 billion underwater, and we're going to basically be able to handle a $312 billion exposure that's growing. Now, granted, that won't happen all at the same time, but, you know, this is risk that is the highest risk out there that no one will take, and they basically can't get approval for a rate that would make them comfortable to take that risk. So they've gone to the state of California.
We brought up on the last episode, are you familiar with the Cloward Piven strategy?
No.
It's I think it was originally done by the left to destroy urban centers, to make life so unbearable that they'll accept any kind of alternative at some point. This reminds me of this. Of like
everything reminds me of this,
right.
Of that.
And I got to say, I did not have obscure insurance legislation making me angry on my bingo card for today.
Yeah.
Well, one of the things that I think is good for people to understand, that insurance is based on two simple things. One is economies of scale. The greater the risk pool that you have, the greater the ability you have to understand that risk and handle that risk and then indemnify that risk in the event of. And then, the second thing is the experience or the statistical data. So when you have companies that have participated in a marketplace, which is what the preferred major carriers have done, who dominate the market and have like 65% of the market, they've been collecting data for 100 years.
Yeah.
And now with algorithms and supercomputers, there isn't anything that they can't basically figure out, and they literally have more information than the governmental bodies.
Yeah. Does anything make you optimistic? Because I know I think you're probably wired like Matt and I, in that you don't really want to leave California, as bad as it's getting. Does anything make you hopeful that you won't have to, or your kids won't have to?
Well, I think that in large organizations, large environments, I always call it the pendulum concept. And that is the pendulum always seems to swing very wide in one direction, to the left or the right, and doesn't seem to kind of like settle in the middle where there's a balance. And I think we have swung so left that people are going to, find out, realize, experience that this isn't the way that I want to live, and the pendulum will start to swing the other way.
See your local sanctuary city, for example. Now, one thing that Kelly had brought up, this was probably a while ago, is we brought up the metaphor. It's like, well, society, culture, whatever it is, it crashes from guardrail to guardrail, and there's that sweet spot in the middle that you're only there temporarily, right? And but then we also brought up in a place like California, I'm like, true, you're crashing from guardrail to guardrail, like running these social experiments on what the whole road is kind of veering to the left the entire time, which is a little terrifying.
Well, and it changes constant. And then the other aspect is everybody has their perception of what, the best way to do things. And, some of these people get, a little bit carried away, with, their perspective of what it should be acceptable. And it's kind of like the human nature, where it's crazy. Like you were talking about, it's amazing what the human being gets comfortable with.
Mm-hmm. Mm-hmm.
You pull in the gas station, you're not shocked anymore, are you, when you see $5 a gallon?
Right. Or we talk about the Mott and Bailey argument of like, gas is $4.50. Now it's $6. Everyone's outraged. Like, okay, now it's $5.50. Like, well, that's better.
Oh, thank you. Right. Thank you for bringing inflation back down to 8%.
I was going to say this whole thing. It reminded me of the inflation discussion, because people go like, inflation is, because we talked about like the 4-year model of Oscar ratings, and they go, inflation's down from last year.
Yeah.
Yeah. Well, you don't get you don't get that rise about the price of gas until you talk to your buddy that went to Houston, Texas, or who went to Phoenix, and it's like, geez, it was $3.20. It was $2.35 a gallon. You're like, whew.
And the gas comes first to California, and it somehow gets cheaper on its way to Arizona.
As it goes into the middle of the country.
Yeah.
Yeah. Then you just keep on going, and it's like, I think we're going to see an exercise in, how much you can regulate and how much you can tax. And we've got the highest taxes, and, I hope and pray we don't have the highest regulation, but it seems as though that's the direction they're going.
We do for now. I mean, I hope and pray that it does turn around, like you said. I mean,
But what will happen, Matt and Kelly, is that we're going to see a shrinking of the players in the marketplace. And the only ones that basically are going to be able to sustain themselves are the ones that have the greatest economies of scale. And that is going to be the preferred major carriers, which, has dominated the marketplace nationwide for, 30, 40, 50 years now, since the 20s, since the 30s, since the 40s. And, all the mid majors, which are the people that are, basically riding on the capitalistic wave of opportunity, insurance companies, they're all going to basically fold up and potentially have to go. And you're going to see a lot of those, from Transamerica to Fireman's Fund to Nationwide to Geico to Progressive, to Mercury Casualty. Mercury Casualty has gotten a very strong foothold in the California market, and that company is privately owned by one guy.
Wow.
So, let's just see how, that all unfolds. We're going in a direction that is, not good. Now, my theory is all this stuff will cycle out and we'll come out the other end, and see where it leads. But, that's probably going to be sometime into latter part of 25 into 2026, and then we'll see, what happens there. And this is under the supposition that there are no major wildfire catastrophes.
Would that set things back, you think, in terms of trying to get some sort of...
You think the insurance companies are pulling back now? All we need is a couple more large wildfires.
Right.
And they'll say, that's it. We're done.
Right. Keep an eye out for government-sponsored.
My conspiracy brain just went through the roof.
I was just saying, keep an eye out for government-sponsored arsonists in your backwoods roads when you're driving around, especially around October.
You really think they do that? I mean, besides in Canada
or Australia?
Or Australia.
10 years ago, I would talk to people, and I'd say, "Where are you from?" Say, "Oh, I'm from Florida." Say, "Oh, really? Yeah. How's insurance in Florida?" "Oh, it's expensive." I said, "Oh, really? What's expensive?" "Oh, we were paying $1,500 a month for insurance on our home."
Wow.
$18,000 a year. And that was like, are you kidding me? That was the most insane thing. Now, to pay $30,000 a year in Florida is not, uncommon, depending on the size of the home.
Wow.
Okay. But, we're seeing stuff in California where, whether you're in LA County, whether you're in Orange County, whether you're in Santa Barbara County, depending on the size of the home, obviously, and then depending on, your proximity to, exposed wildfire areas, to pay $10,000 a year, or even $15,000 or $20,000 a year is not uncommon.
God,
dang.
Yeah. So, but the way the insurance market works, there will be a lot of unadmitted carriers that will potentially come into the marketplace, and they're going to always be significantly greater than the admitted carriers. So everything we're talking about here about this sustainable insurance strategy, this is all stuff that admitted carriers are going to participate in. And the benefit of an admitted carrier is you get to participate in what they call the CIGA, which is the CIGA. And that's the California Insurance Guarantee Amendment to collect 1% of all premiums to safeguard companies that collapse. And here again, that 1% that they're taking is, sitting and just getting accumulated. And I haven't heard of any company collapsing in California in the last 20 years since Executive Life went out, and Century 21 went out after the Northridge earthquake. They did go down. So that's the last I've heard that has basically not been able to pay their claims, where the CIGA has stepped in and paid that. So admitted carriers get that because that's the safeguard to the consumer. And then the second part of it is insurance is regulating those insurance companies, or they're agreeing to be regulated by the Department of Insurance. So when that regulation starts to get too onerous like it is now, insurance companies are leaving, and then the unadmitted carriers come into the marketplace, and those are offshore companies that be like you and I starting an insurance company and saying, hey, we're going to do business. You don't know what lurks behind their financial statement. So,
right.
Lloyd's of London is the most well-known unadmitted excess and surplus lines carrier. When you can't get insurance, they go out to Lloyd's of London. Lloyd's of London comes back and says, this is our price. We can do it for this. So,
and it's exorbitant, right?
Usually.
Yeah.
Yeah. It's definitely not less, so they don't have, all the economies of scale.
They must insure a lot of weird things then, right?
Oh yeah.
Like, what do they insure? Like people's just regular assets, like gold storage or
they'll do anything.
They'll do anything.
They'll do anything with the right amount of information.
If I was a model, would they insure my face?
They would.
Okay.
They want to take a picture.
Write that down.
There's a policy.
Wait, they got to see a picture? Shit.
I guess one of the things, like, I don't know if you guys are familiar with, the insurance conglomerate AIG.
Mm-hmm.
Yeah.
Okay. They dominate, the casino and gaming industry, which obviously are, it's not very big. It's Las Vegas, Atlantic City, and then a few different places throughout the country on Indian reservations.
And AIG, were they, if memory serves, they were a major contributor to the 2008 financial collapse, correct?
Mm-hmm. They were insuring, what were they insuring? Like Lehman Brothers or something? They were insuring some sort of financial.
Yeah, they were involved in that.
So, and speaking of gambling, I mean, you repeat yourself, I guess.
Yeah.
But yeah, so they're similar to Lloyd's of London then, and that's kind of their game.
They consist of over 100 insurance companies, and like they started an insurance company just for a certain industry, such as the gaming industry, and it's just they're the only play there.
So they're not an actual insurance company; they're more of a venture capitalist that collects insurance companies and puts them under their umbrella.
Yeah, they come in annually and, or every 2 years and negotiate with the casinos and say, okay, here's basically, what our rating structure looks like. And, do you guys want to have insurance or do you not? And,
interesting.
Because there's not too many insurance companies out there that are interested in, insuring casinos.
Why not? Aren't casinos just moneymakers?
Well, I mean, just the traffic, the amount of people that go in and out of those, and and then different types of all the equipment that they have in there, and but you haven't heard of a casino catching on fire and collapsing, so there must be at least a positive of enough experience for them to continue to do that, and then it becomes almost like for the industry, almost like their own personal program, because, the insurance company's coming back in and saying, hey, here's what we experienced. Here's what we need to do. Your rates are going to go down. They're, or they're trending up. And, it's just very unique to, that industry in itself. So
doesn't sound like a bad job to have if you can get it.
Yeah. Well, there's only one company that does it,
even better, even better if you can get that job.
Yeah. I mean, I've known a few people that have worked in that unit, I mean, they've got, I think he said, there's 150 people that just work in that unit that does that, the casino gaming. So
I've always heard that monopolies are very lucrative. Speaking of PG&E.
Yeah, that's what AIG does. They left the California marketplace.
Oh, really?
For home insurance. Know that. Yeah, and so did Chubb. Chubb has left the marketplace. They're gone. They're no longer. And an insurance company, when they leave the marketplace, it's not a short period of time. It's like it's you can wind down, over a year, but you technically can't. You aren't out of the marketplace until 3 years.
Mm-hmm. Mm-hmm. And I'm just assuming that the reason they left was climate change.
Correct. Yeah, correct. Yeah. Keyword change. Yeah. Yeah, no, it's it's quite interesting, to see it happen, right in front of you during your lifetime, when you start to see, these are huge changes that, will, reverberate for many years to come. So
does it make you nervous?
Yeah, I would say, it's definitely, not confidence building, that's for sure. And that you're, able, to play the game, even though the rules are changing dramatically.
It's got to help that you're not just starting out in your career.
Oh yeah. Yeah. I've been in the insurance business for, 40 years.
Mm-hmm.
So, I think, what happens is that they'll start to see a balance where it's like, hey, we have to make it so that it's feasible for the insurance companies, or we're not going to have a thriving market. And a healthy and thriving insurance market is basically what the mission of the Department of Insurance commissioner's job is.
That's what it's supposed to be. That's why we have one, right? That's the bill we're sold.
Mm-hmm. So I think when we start pulling the covers back over time about what's gone on in California, we're going to see some stuff that it's going to be unbelievable. We're seeing, the manifestation and the realization of all that stuff in San Francisco.
Mm-hmm.
Now we're seeing it on a broader scale for the whole state of California.
Yeah, hopefully those indicator waves of the big cities have the effect of warning everyone that it's not too late to turn the ship around. Let's go. We've got to get this shit under control.
We always refer to San Francisco as basically a dystopic terrarium where we're an hour north and we can just sit there and watch it, going like, they're running the experiment. We get to sit outside and watch and see how it goes, which is not very well.
Yeah.
It's hilarious watching them defend what's going on there.
Yeah.
I've talked to people that live there, and you ask them, you say, hey, what do you think about the doom loop that's happening? And they'll just, hey, there's no doom loop happening. Everything's fine.
Yeah. Yeah, I've seen that a lot.
Yeah, you're like, whoa.
Have you looked at the human feces maps?
There's literally an app, a profitable app that you can have to track bum shit.
Yeah, but the open brazenness of what's transpiring, I think, is really the other thing that is very, very concerning and almost shocking. Like, we've got the head of China coming to San Francisco, and so
and voila, all the homeless disappeared. It was amazing.
We started to clean things up, and so. It's very interesting. So,
all right, man. Well, listen, really appreciate you taking the time.
Yeah, thank you so much, Bill. Really appreciate it.
Absolutely, and I find it really, really great that you guys are exploring all these topics and getting them out to the general public and those that want to kind of understand the depth of what's transpiring better. And,
well, the one payoff that we always talk about that keeps us going is that for every friend that we have lost, we get a new one. So we appreciate you taking the time.
We count you among them. All right, man.
All right.
Have a great rest of your day.
Thank you.
Okay, you too.
Fascinating, huh?
It is to me.
Yeah.
I was trying to put my head inside, like what would someone else think of this?
Why would you do that? Have we ever done that before?
I thought that was wildly fascinating to me.
Yeah. I just wonder, like, at what point, like, kind of what we were talking about right there when we were hanging up, like, at what point are people's, what is the thing? Is it your sense of self-reliance or survival? When is that going to kick in and realize that you can't keep electing the psychopaths that we have in this state? I think that for most people, they probably who vote for Democrat in California, they think, well, I don't want to be Mississippi in the 1930s. That's the only alternative. That's just the most.
That's
like
not what I'm proposing.
just the most awful, racist, right wing.
Well, I think you're actually
Nazis.
All jokes aside, I think you're kind of speaking to something. This is the problem I have with California. Let's just say California. I was like, there's no balance. It's complete uniparty. I'm not saying everything needs to go full like this crazy right word term. You know what I mean?
Yeah.
I'm just saying like we need liberalism. We need conservative. We need left. We need right, as stupid as those terms are. It's like that. So there's an open air discussion. Sunlight is the greatest disinfectant. And then we keep that car between, stop crashing into the guardrail over. We've been, I don't know, like that scene in the Terminator where he's just like against the guardrail the entire time. It's like, can we just get to the center?
Do you see the sparks? Yeah, dude. I don't know. It's you talk to a guy like that, and he really kind of breaks down where the rubber meets the road. What's happening in California?
Yeah,
and it makes me think like people just have to realize we're the only state in the union that has an insurance commissioner.
Yeah,
having that insurance commissioner whose job is to hold these evil insurance companies' feet to the fire and really make them, come bring their rates down and be fair to people. It's like, okay, why does no other state need that?
Yeah.
How come every other state, the insurance companies get to charge what they want, and yet we still have the highest, some of the highest insurance rates in America?
Right.
And it's like that with every goddamn thing.
Despite that, they're still leaving.
And now they're leaving.
Yeah.
Yeah. You've ruined it. Now they're leaving, and we're going to have government insurance. Like every single thing, the government schools, the government housing, government food. I mean, anything that's controlled by the government is shit. Mm-hmm. And in California, we have the most of that.
Right.
The most heavily regulated state, maybe next to New York.
Yeah.
And next episode, I want to talk about New York a little bit. Even though, we're not, I don't think we're as bad as them, but we really can't talk too much shit to New York.
Yeah.
Because it's pretty bad here too. But the shit that's going on there right now, I actually am grateful that they're here to let us know that it could even be worse if we continue down.
I always said the secret to happiness is to be able to point at someone that's less off than you, having a worse day.
The sky got me asking Jesus why Ian fell in love with a woman 55. No soul so old, holding gold in both hands. Why she's still with both mans, looking like she eats crayons. Somebody save Ian, cause I don't want to see him with the 40-year-old gold digging European. There's a cougar on the prowl, bringing young men down. She's older than your dad and she's coming to your town. Somebody save Ian, cause I don't want to see him with the 40-year-old gold digging European. There's a cougar on the prowl, bringing young men down. She's older than your dad and she's coming to your town. She's at death's door. Why you let her give you head for? She's 6 months away from inshores and getting bed sores. Ancient, I need my pills 3 times a day. Shit, 18 hip replacements and 8 facelifts. Nip tuck, how hard is it to get your dick sucked? 10, you're a big buck. Hoes can't keep their lips shut. This ain't personal, don't wanna see her hurting you. A bad woman who don't love you, bring out the worst in you. I ain't burning you, Ian, I'm just relearning you, refining you with fire the same way that a furnace do. It should have been a hit and run, John Bone Jones. At least he knows when to leave a dying bitch alone. Somebody save Ian.